Welcome to Gray to Great, the podcast where we will pull back the curtain on what it truly takes to thrive as a corporate retirement plan advisor in today's tech-powered business world. I'm Dal Degan, but all my friends call me Triple D. As a former sales leader and CEO and now board member of Alera Group, I know that success in this field goes beyond the numbers. In each episode, I'm going to team up with one of your peer retirement plan advisors to bring you the strategies that separate the best from the rest. From prospecting and referral business to challenger selling and tech adoption, we're diving deep into the parts of the business that too many of us overlook. Whether you're here to sharpen your skills or if you're looking for the next big idea, this is where the playbook gets rewritten. So get ready for sharp, actionable insights that'll take your practice to the next level. Because in sales, there's no gray area. Hello, everybody. Welcome to another episode of Gray to Great. I am our host, Dal Degan, and I'm joined today by Matt Compton with the Alera Group. Welcome, Matt.
Thanks, Dan. Pleasure being here. Thanks for giving me an opportunity.
Thanks for joining us from New Jersey, just outside Manhattan, if I recall, right?
Yeah, absolutely. Down in Monmouth County, New Jersey. So about a 35-minute boat ride into downtown.
All right. Well, thank you for joining us. And I want to give some shout outs as well to the Alera Group, who is a familiar name to our listeners of this podcast, because it was about a year ago we had Holly Knight with Alera on talking ostensibly about AI, a conversation that's certainly evolved a lot since then. And then I think that the Alera Group's also gotten some other really nice accolades here. I'll look at cheat on some of my notes. Krista Bresnahan, I think from your team, won an Excellence in Operations Award for advisor firms in the country. And I think that the Tri-State Area Group office also named you as a Napa Advisor of the Year back in 22, if I recall.
Yes, we were fortunate enough to win a couple of national recognized awards, both Plan Advisor of the Year back in 2022, and then Krista Bresnahan from our team won the Excellence in Operations Award last year as well.
Nice. That's no small thing. Those are hard-earned distinctions. And it sounds like, although you've been at Alera pretty recently through Bio Benefits, that you were about 11 years at Principal before that. Is that right?
Yeah, that's correct. I was at Principal for about 11 and a half years or so. Joined Brio Benefits back in 2019. So coming up on our 7-year anniversary from leaving Principal. And then we joined Alera Group back in October of 2023. So coming up on our 3-year anniversary of joining Alera Group this October.
Congratulations.
Yeah, thank you.
Great trajectory.
Now,
as we were talking, leading into this conversation, you've got a unique perspective, given the depth of your experience in record keeping, which I think is reflected in your philosophy on what makes for great outcomes in retirement plan advising. I'd love for our listeners to hear more about that, your perspective on the importance of record keeping.
Yeah, I mean, I loved being on the record keeping side of the business. As I said, I did it for about 11 and a half years or so. When I kind of reflect back on my 11 and a half years working on the record keeping and administrative side, I sort of view it as an education where I was also getting paid then, right? I had an opportunity to work with hundreds, if not thousands of other financial advisors, a lot of really strong advisors, folks that are out there that I'm happy to compete against now on a day in and day out basis that I think do an excellent job helping employers and plan sponsors across the country. And then maybe some other advisors where I would say, not that they were a bad advisor, but they weren't really focused on the retirement plan market space. I think most advisors out there tend to focus in the individual wealth space, and that's just different, right? It's just that it's a different market. It's a different area of expertise. So yeah, when I look at those 11 and a half years, just an overall great experience, really, I think helped bring me up in the industry, taught me a lot about what I do on a day in and day out basis today to try to improve our clients' experience when it comes to the oversight of their retirement programs. And equally, if not more important, trying to improve the retirement plan participants that we serve and their retirement outcomes.
And do you find, Matt, that is among your differentiators for the Alera Group, or even when you were at Brio Benefits before the merger, is the depth of your experience in record keeping is helps you bring better outcomes?
I certainly think so. I'm a bit biased, but when I joined Brio Benefits, it was founded by two of my now partners, Jason Pastrano and Rich Kaczynski. They also came from sort of the provider side of the business. So they worked at Cigna on the health carrier side. And, back in the late 90s when they met, they were working on the provider side and they met one another and they kind of looked at each other after working with a lot of benefit brokers. And I think kind of came to the conclusion like, hey, there's got to be a better way for us to really have a positive impact on our clients and the employees that we're overseeing. I was fortunate enough to meet them back in 2008, and really they would lean on me to be that retirement plan expert. When you're servicing employers and plan sponsors, both on the employee benefit side as well as the retirement side, oftentimes you're talking to the same people that are making the same decisions. It's just decisions on different sides of the employee benefit spectrum, whether it's health and ancillary and voluntary benefits or retirement benefits. And they kind of recognize, like, hey, if we're going to be engaging all of these different decision makers at companies, we should probably have an opportunity to assist them on their retirement plan benefits as well. And to their credit, I think that they recognize maybe that they weren't experts specifically in the retirement plan side of the business. So when they had clients that were asking them for help on the retirement plan side, they would sort of pull me in to those discussions. But then you get to a point in your career, and I certainly got to a point in my career, when you're working for a major record keeper and you're doing well, it's very easy to stay there and keep doing it. And after a while, I think that I just started to realize that I was not having the impact that I really wanted to have on our client base. When you're kind of serving that record keeper side of the fence, you're being brought in by advisors, you're engaging these employers and plan sponsors, but you have maybe an hour to have an impact, right? You're going in, you're giving a presentation on your platform, you're waving the flag of that record keeping partner that you are representing, and you obviously take pride in it. You're trying to do the best job you can, but then you really leave the room, right? And in many cases, you find that you're still servicing that advisor because you're that advisor's primary and dedicated contact on the record keeping side. But you're really not servicing the client face to face or one on one anymore in that capacity. And after doing that for that many years, I just got frustrated with it. You really don't have as much control. You're waiting on advisors to bring you opportunities as opposed to going out and finding them on your own. You're not really having an impact with the day-to-day folks in the HR department or the finance department of the client and trying to problem solve. And you're certainly not having an impact as much with those plan participants, right? And when we really think about employer-sponsored retirement programs, whether it's 401k plans or 403bs, the reason that they exist is to provide people money and income when they go into retirement. Right. And I think the further we get away from that, the further I think you could start to see that maybe the plans aren't working the way that they need to be, right? Or ultimately providing that benefit that so many people in this country are ultimately going to need. And after several years, it really took me several years to figure out, hey, I probably need to go to the advisory side of the business if I really want to try to have that impact. I eventually got there, and in 2019, I finally made the decision and went over to Brio, and we grew a 70 million or so AUM retirement practice to now over 1.4 billion. And in doing so, I just feel like we're really having a positive impact on all of the clients that we're working with. And as I said, more importantly, they're plan participants.
It's an inspiring transition that you made when you went from the RK world into plan advising. Tell me about what might have been some, no, what did I do moments that you had when you first made that transition.
Yeah, so that was October of 2019. And if you recall what happened in March of 2020, that was the year of COVID. So yes, I would say about 6 to 7 months into it, when that hit, there was a very quick Pratt moment. What did I do? Right. In retrospect, I think it was one of the best things that could have happened to us as far as building the model, building out the tools and resources for our clients, because it really gave us an opportunity internally within Brio as an organization to figure out, how do we really want to build this, right? What do we want to use as far as the tools that we are going to use to find new clients, how we're going to service our clients? How do we want to train the rest of my now colleagues in the benefits team to identify retirement plan opportunities and to work with one another, right? Because ultimately what we've always been trying to solve for since I got here in 2019 is, how do we create a more holistic experience for the plan sponsor and the employer? Because really, if you think about the way most employers handle their benefit programs, is they've got one benefits broker or consultant that's handling 95% of their employee benefits. And then you've got this retirement program where, for whatever reason, the way the model was really built is that same employer and plan sponsor is going to some entirely different person or organization to engage with the oversight of their retirement plan benefits. That to me becomes very problematic And the reason I say problematic is because, and again, I didn't really know this even before I joined Brio, because when you're on the record keeping side, you're out there, you're trying to engage financial advisors, you're looking for opportunities, and ultimately you're trying to go in and you're trying to win a new plan with that advisor. One of the things that you don't recognize is that when it comes to the retirement plan side of things, unfortunately, employers, the way the model is structured is employers don't necessarily have to take action on their retirement plan every year.
Right.
Doesn't mean they shouldn't. They should, but they don't have to. If you compare that to the employee benefits side, every year the employer is having to make a decision because every year they're going through renewals. They have to do open enrollment. Their employees are reelecting their benefits, right? So it becomes, I think, very easy for a lot of employers and financial advisors for that matter to leave the retirement plan alone. It's sort of that model like, hey, if it's not broken, if I'm not getting a lot of complaints about, for my plan participants on record keeping platform or the investments or the fee structure, I'll deal with it next year. And that can become a very perpetual cycle. That's ultimately something that we are trying to solve for, right? Where instead of the retirement plan benefit just being this other piece that you have to engage a separate team on, we really want them engaging us on all aspects of their employee benefit programs and continuously try to pull and promote really the retirement plan benefit that they are providing to their employees, because these plans are not cheap, right? I mean, most employers are giving some sort of an employer match or an employer contribution. It could cost hundreds of thousands, millions of dollars every year in the benefit that they're providing. We believe it's something that should be leveraged to help continue to improve employee culture within their organization as well.
That makes sense. And do you find that holistic approach makes it easier for the plan sponsors, maybe even the plan participants, to have those conversations?
100%. Yeah, I mean, because now when something pops up, the way that we have built our service model is if we tell our clients anytime that they have a question or an issue that arises on their retirement program, we want to be their first phone call. And we don't do that because we want to have all the control. We do it because we find that there's a language barrier almost between record keeper, administrator, and client, right? Because everybody wants to speak in their own terms that they're familiar with. And it becomes very difficult for the plan sponsor, I think, to really figure out like, hey, what broke here? Did something break in my payroll integration? Did something go wrong with my plan design? Is this an investment issue that popped up somehow, right? It becomes difficult, I think, for the client oftentimes to figure out where the breakdown was and how do I correct. So by us telling our clients, hey, something's going to break, because we know that already. There's always going to be something that's going to break along the way. By us sort of promoting and encouraging them to come to us when that happens, we find that we're actually more efficient. We make our clients more efficient. We certainly, I think, decrease the frustration level for everybody involved, because when an employer tries to correct the issue on their own, they're working either through the administrator, the record keeper, and sometimes that's one and the same as far as the organization. And we find out about it 2 weeks, 3 weeks later, and we're reading back their email chains and trying to figure out like, hey, how did we get to this point? That can become a really frustrating experience, I think, for the client. So if we can help solve for that and also help, I think, get where we need to go a little bit quicker by being that primary point of contact, that's what we try to promote.
That's powerful as well, because it strikes me, Matt, that the world of investing generally, whether you're a financial advisor or a retirement plan advisor, is not getting less complex. It's becoming more nuanced and complex. And to a plan participant, and I can say this from firsthand experience, as being a retail investor myself, the level of complexity can make people recoil from it and just say, all right, I don't get that stuff. So they trust that you have to place in an advisor to interpret and simplify that universe for us is all the more important. How do you do that? And in particular, as you grow your firm, I'm curious, do you look for that talent and young people you bring to the firm, the ability to take what is complex and getting more complex and present it in a simpler way?
Yeah, we do. Absolutely. And as I said earlier, we really focused on trying to grab top talent from maybe some of those other record keeping or administrative firms, because we live in a very complex world, specifically with what we do. And it's not that the individual wealth side is not complex. I have no doubt that it is, and we do some work in that space as well. But the reality is that the individual wealth space and the corporate retirement plan and the nonprofit retirement plan market are just very, very different areas, right? We also see many advisors because they're focused on that individual wealth side, they're not as familiar with things like ERISA and plan design and collective investment trusts, right? And what an HR person is going through on a day-to-day basis with payroll integration processes, right? Like at annual audits, right? There's all these details and complexities that go into the oversight of a retirement program that I think many clients really struggle with. More times than not, when we engage a client for the first time and they're frustrated, because oftentimes when they're open to speaking to new advisors, new consultants, new fiduciaries, they're typically doing it because they're frustrated about something, not always, but I would say oftentimes something recently popped up where they're willing to take 30, 45 minutes, an hour to have a conversation. We often find that they very rarely place any of that blame on their advisor. They oftentimes think that it's something that happened on the record keeping or the administrative side, and that could be true. But when we start asking questions and we have those conversations, all of a sudden we start to flush out, well, wait a minute, how involved was your advisor in these discussions?
Right.
And
Yeah.
oftentimes, well, they're not. They're our investment advisor. They send us
Yeah.
quarterly investment reports, and they come in, 2, 3, 4 times a year, and they meet with the committee and they talk about the investment options. I don't want to downplay the importance of that because that's a huge part of what we do. We serve in a fiduciary capacity for every client that we have. But one of the things that we really try to get away from is, listen, that's probably the most commoditized part of what we do. And again, it's not to downplay it, but the reality is that most investment advisors, right, are using all of the same or similar investment screening and monitoring criteria, as are we. Right. And again, I think most specialists are using very similar tools. Where we need to differentiate ourselves is everywhere else, right? Everywhere else. And as I said, again, the plan design, the participant experience, individual one-on-one meetings with the employees, everything that the HR team is going through on a day in and day out basis to make sure that the plan is operating smoothly and effectively, their 5,500 filings, like all those things are, I would argue, are what the client needs the most help in. And that's where we try to focus. So getting back to your question, it's very difficult to just take anyone and put them into this role and think that they're going to be successful because of all of that past experience and knowledge and understanding of how the corporate and nonprofit retirement plan markets work. So we've been very deliberate in trying to identify talent at some of the partners or administrators that we've worked with in the past so that we know coming in, we know typically two things. We know their work ethic, because if we've worked with them a little bit as partners, we typically know who's responsive and who's not. And two, we know that they have the knowledge base to ultimately service our clients to be successful. So listen, different teams are obviously going to have different approaches to building out their model, but we have found that this is a model that really works for us collectively across our team. Now we probably have, over 50 years of record keeper experience on our team that we can turn to. And I think actually our record keeping partners really appreciate it as well, because we know, their struggles that they go through when they're working through management and working through issues and trying to get things approved if their advisor's asking for it.
Yes.
And some of the delays that they can run into, right? So I think that they appreciate that we have that experience and background a little bit. And we also try to understand what their goals and objectives are throughout the course of the year as well. Right, so we can help.
Makes a lot of sense. I can see where that's a differentiator for Alera. You've already walked a mile in those shoes when you've spent part of your career in the record keeping business.
Yeah.
So to that end, then, what other characteristics do you look for? Does Alera hire younger raw talent, or do you tend to look for people with experience throughout the industry in the way you're describing?
Yeah. So I would say across Alera, we currently have about 55 advisors. Right, throughout the country. And because Alera Group was sort of built and founded on acquiring a lot of retirement plan practices across the country, every team at Alera Group, I think, does things slightly different. That's changing every day, where we're trying to build a little bit more, commonality across, the different advisors across the country. But we do still have an opportunity to have our own little twist, right? And our own little independence on how we want to structure our teams locally. So while I think that we are always looking to identify talent within Alera Group, both from a shared service perspective, right? So teams that we could tap into within the organization across the country that we can leverage and create scale, right, and create efficiencies. We have a great internship program. I currently have an intern that's working with me over the course of the next 2 or 3 weeks, right? So we're always trying to identify, I think, both brand new talent that's coming into the industry, but also identifying, as I said, talent that we know exists because we've already had an opportunity to partner with them and we understand how they operate on a day in and day out basis. And that's the one piece where I would say is always a little bit of an unknown when you're going through hiring, right? Like you feel like you can know a lot about somebody. What I don't think you always have a great feel on is sort of when you're working with them on a day in and day out basis, like what exactly does that work ethic look like? But
Right.
if we can eliminate some of that unknown, right, via those past partnerships that we've had, we think that that's a pretty good combination.
If we could solve for all of that, we could advise NFL general managers on drafting quarterbacks, right?
No, no doubt, Tim. No doubt, for sure.
So speaking of young talent, Matt, we love to wrap up these conversations with this question we talked about a bit in our pre-call, which is if you had a time machine and you could go back and advise a young Matt Compton at the start of your career, what would you advise?
It's a great question, Dan. One I've probably thought about several times. I would say the easiest thing from my perspective is I should have moved to the advisor side sooner. But I say that half tongue in cheek because I do very much recognize that those 11 plus years of being on the record keeping side really laid the foundation, I think, for me to build my own expertise in the space, for me to build relationships with, many people who are now part of our team here, right? So I wish that I had gone to the advisory side sooner just because I love the impact that we're able to
Mhm.
have now with our
Yep.
clients, but I also am not naive enough to understand that I would not be where I am on this advisory side today without those 11 plus years,
Sure.
on the record keeping side. But I think it's also important to just remember relationships are paramount, right? I can't tell you how often we have a client. People change jobs more frequently now than they used to, right? We work with a lot of newer HR professionals that come into one of our clients or they hire us at a new client that we're working with. And one of the things that's really great to see is how quickly those new HR finance professionals are moving up in their career as they shift from one employer maybe to the next. We've made a really conscious effort to try to educate those contacts, right? Those new HR professionals coming into our clients' offices, those new finance professionals coming into our clients' offices, doing our best to educate them so that they can be successful. And what we're noticing is that when you're willing to spend the time with them to help, when they go to their next employer, which is likely going to be a promotion, they're so eager to bring us with them, right? They get to that next employer's office and they're like, hey, we need to be working with the Alera Group team. Like, they were absolutely awesome. Every time I had a question, they picked up their phone. Every time they had an email, like, there's nothing more rewarding, I think, that when you're working with your clients and they go from one employer to another and you're one of their first phone calls because they want you to continue to help and partner with them moving forward. So, in addition to my own background, I would say relationships is absolutely paramount. And for any young, person coming into the business, you can never spend enough time helping someone succeed in their career or helping a client. Normally, when you do that, it's all going to work out.
Pays great dividends for the rest of your career. That's right.
Always.
That's great advice. Yeah,
Yeah.
relationships indeed. Well, thank you so much, Matt. We really appreciate the insights, especially that last part about how you wrap that all up into advice you would give your younger self. Our listeners get a lot out of that, as well as all the experiences and lessons you've shared. So thank you very much for that. And we will be back soon with another episode of Gray to Great. Thank you, Matt.
Thanks, Ed.
Thanks for tuning in to Gray to Great. I hope you're walking away with a few new ideas, a few bold strategies, and a bit more fuel to take your business further than ever. If you found today's conversation valuable, make sure to subscribe, leave a review, and share this episode with a colleague. The best way to stay sharp is to keep learning together. So I'll see you next time right here where we will cut through the noise to bring you what really matters. Until then, keep pushing forward because there's no gray area in achieving success.